Hey guys, it's Crossroads here. Today I'm going to talk to you about PayPal and why I'm actually very excited by their quarter two earnings. Now, this is an earnings preview. They have not come out. So if you're listening to it after they've come out, maybe I'm completely wrong, but I think that the excitement is justified, but not really so much for the numbers that they're reporting, but what they'll be guiding on, and also the very low expectations that they're coming in against. So let me just pull this up right quick and show you what I'm talking about. So we can see as far as what analysts are thinking, and we can see PayPal has a history of beating analyst expectations because they're very low right now, and their own guidance is very low, which we're going to talk about towards the end here. That's what I'm most excited about, by the way. We can see a lot of analysts do cover PayPal, and they're looking at average estimate of 1.3 for EPS, revenue of about 8.08 billion, which is less than 3% growth, and we can also see as far as revisions that they basically have risen from 90 days ago, but it's not by a significant amount. It's actually holding about the same. We can see the EPS revisions have been revised up as well, and growth is actually pretty optimistic right there. So, is this in line with reality? Well, let's look at what PayPal specifically had said about their earnings. Now, they don't say here on this slide what they're saying for revenue growth, but they do within the transcript itself. But they say that they're maintaining financial year 2025 transaction margin dollar and EPS guidance. And so they're guiding actually for that 1.29 to 1.31 per EPS. And I actually see them coming at 1.31 in the upper range there. Now, normally, I think that they're being a little bit too cautious, and I'll rise that. But one of the things to know with EPS specifically is they said that they were moving a lot of their marketing expenditure specific to this quarter. They've done a lot of that through Venmo, through the omni-channel push in Germany, through the Will Ferrell commercials. There's been quite a bit. So there's a couple $100 million that looks like it'll hit that. They might beat it, but it won't be a significant beat. And that's still a beat, though, over the average analyst expectations going in. Now, maybe they revise those before the time, but I expect that this is the one area where if they don't beat, this is where perhaps that they miss very slightly on EPS. Not the biggest concern, but I do think it's going to be a very small beat. Transaction margin dollars, I think, will come just a little bit north of that as well. Big one of the things to keep in mind, too, is that they say, this is 6 to 7% growth, excluding interest on customer balances. That's one of those headwinds in this quarter specifically. So just know that that is their chief measure as far as how they're doing, because you really get in the underlying. But the revenue really does matter a lot for the company. And the neat thing is that we have a pretty good idea as far as how revenue is supposed to come in. So the average estimate for analysts is 8.08 billion in terms of revenue. A high estimate is 8.23 billion. So what did PayPal say? Well, they don't guide for it in the slide, but they did mention it in the earnings call itself. Jamie Miller said, for the second quarter, we expect low to mid single digit revenue growth on a currency neutral basis, which is impacted by the Braintree renegotiation efforts I discussed earlier. So in essence, one thing you need to know going in, and if you've not been paying attention to PayPal for a while, is that there's a strategy that they've employed, which is basically renegotiating Braintree rates. Previous administration and leadership at PayPal was like, hey, let's basically give this product away and try to sell of their value-added services. A lot of problems with that strategy. And so PayPal has said, okay, let's instead go to these merchants and basically say, well, in exchange of reduced volume, we'll actually have higher margin. And those have been going well as far as conversations, but it's an ongoing process. And that's the reason why last quarter they presented really a 2% year-over-year growth. Leap day and the strong U.S. dollar currency made it 1% effectively, which is tiny. It's terrible. This is the last quarter of the full headwinds, which is a 5% revenue reduction on the top line for PayPal that they'll have. Now, I do think that there will be a little bit of those headwinds in quarter three. By quarter four, it's abated, and they'll actually be lapping those weaker numbers as well. So this quarter, I think that they're actually going to do better than expected simply because they said, hey, they expect low to mid single digits, assuming dollar neutral. Now, that is a big part of the way that PayPal reports. Over 40% of their revenue is coming from international sources. And so that is very much impacted by a strong United States dollar. Companies that have this sort of environment, there's a lot of them out there that get a lot of revenue from international sales. What they do is they'll actually do what's called currency hedging. And so in essence, they'll take some money and they'll basically hedge just in case the currency is incredibly strong for the United States dollar versus a basket of currencies, they'll make some money off of that versus just taking the full hit. So when it shifts the other direction, which it certainly has, this is the DXY. This, in essence, is showing the United States dollar against all, well, a big basket of currencies, not all currencies necessarily. 100 is considered neutral. And if you look here, let's look over at all time. If we zoom out, you can see right here is the 100 line. There's many times when it goes under, but it's really been a long time, really since COVID, January or February 2022. It hit that $100 or 100 amount and rarely looked back. In fact, we saw really stiff headwinds right at the beginning of the year, actually at one point peaking over 110 for the DXY. What does that mean? Basically that you're getting 10% less in US dollars than you would expect from other currencies, this basket of currencies. Now, the neat thing is if we look at year to date here, we can see first quarter, is end of March. And what happened after the end of March? Well, it was still, a little bit elevated. That's not too bad, though. Your hedging basically benefits you in that scenario. But as you go into the quarter, when we get into those tariff woes in April, that's where we actually got below 100. And you can see on average, all the way through the quarter, we're actually below 100. So when they report dollar neutral, it might actually be a little bit, less revenue than dollar neutral simply because they do currency hedging, although not for the full amount that they anticipate. But what this is going to enable them to do is beat on that top line revenue. They, of course, have had that big omni-channel push in the United States, but also in Germany, which ramped to 1 million people in almost no time. Again, PayPal has a massive presence in Germany. I have a video separately on that. And they've really not been present at all in stores. And so they've changed that. They've shifted that. There's been some agreements as well with the NFC chip for Apple that have led to this as well. But that's a big, big space for them. That's going to lead to an increase in revenue as well. And there's some other things in the States here which will increase revenue, but they still have that 5% Braintree headwind. So what am I expecting as far as revenue? Again, analysts are expecting $8 billion and $80 million. I'm expecting actually a little bit better than that, about $81 billion or $81 million more of that. So it's going to be about 3.5% year-over-year revenue growth, just period. Not necessarily even currency neutral, just because they benefited some from hedging, but even more so, the dollar was actually neutral for once, which is amazing. And it's also amazing going into guidance. Again, hold on to that, but that's what I'm most excited about. Now, where does that put them as far as free cash flow? Well, let's take a look at free cash flow. It is a bit lumpy, but it is important for us to take a look at this. So here is the free cash flow itself. And you can see, actually, it's easier to see even if we look at it over a yearly basis, what Alex Chris has done. When he came in, I mean, you can see the orange here. Free cash flow wasn't looking good, and this was actually propped up by a divestment that they did. Otherwise, they would have been in a world of hurt. Last year, a colossal amount of free cash flow, and they guided for $6 to $7 billion in free cash flow. If we look at it over a quarterly basis, it is lumpy. Of course, quarter four, they do the most volume, their seasonality there. So do expect that. But I would expect that this is probably the low mark in terms of free cash flow for PayPal. And so I actually expecting about, $1.7 billion in terms of free cash flow. That in turn fuels a lot of things for PayPal, including those buybacks, which, by the way, I'm not guiding for this. I'm not talking about this so much, but you can see this persistent impact of buybacks as well, which does help, and probably is the reason why that they will beat EPS, simply because they continue to delete a large amount of shares, especially as PayPal trades at a softer valuation. Now, another thing that PayPal doesn't necessarily guide on, but they do certainly talk about, is transaction margin dollars. Let me pull up this chart right here, which is one of these key charts, just to kind of show you where they've been and going from. The gross margin here in particular, you can see that it bottomed out in quarter one, 2024. Shortly after this, actually, I believe it was quarter two, 2024, is when they began to implement, between this time, that Braintree shift in strategy. So instead of having a very low take rate to the point where they were almost giving the product away, they said, let's renegotiate these things. And you can see how the gross margin and also the net margin have improved since that time. Now, there are other factors you can look at. You can look at take rate and so forth. That one is a little bit more lumpy as well. But as far as margin, I think that they're actually going to go up to 48.3. This will be the biggest remaining increase in the year. There will be some, I believe, in quarter three, maybe in quarter four as well. We'll have to see how that one plays out. But this Braintree strategy, this shift really has helped on the bottom line with margins. It's helped with transaction margin dollars, net dollars as well. And we're going to see the full weight of that impact really beginning next quarter. So I'm very bullish on the numbers that they put out. But the thing is, you need to know that the top line revenue, like if they do what I'm expecting, that's 3.5%, maybe 4% year over year revenue growth. That's not great. And right now, the market is very much focused on that top line revenue growth. Now, they're going to begin accelerating rapidly into the second half because those Braintree headwinds have shifted because of a lot of those things and initiatives that they're pushing out, including advertising, including the Venmo pushes at the Big 10 and Big 12, including the full quarter of that Germany omni-channel push. There's a UK rollout. They have newer integrations that are actually lifting a lot of the transactions by 100 basis points as well. They have a whole lot that they've been cooking, and we're not even talking about Fastlane, which isn't going to be monetized until next year. That said, I think what's going to be most exciting about this is going to be the guidance. Oh, by the way, one more number. Active users, 439 million. That's not the most important number for PayPal. It is a little bit more important now that they have an ecosystem. But why this is significant is because they actually will post an all-time high. I think some people might have said, okay, they're at 436 million, no big deal. It's a one-time increase, but you can see that they bottomed. They continue to climb. They're not doing this by subsidizing accounts heavily. And so I think that we're actually going to see a little bit more than a 2% increase at this time. We'll have to see, though. So where does that put us as far as why I'm excited about these PayPal earnings? If it's not top line revenue, if it's not free cash flow, it's good, but it's not ridiculous. If it's not because of an EPS beat, what am I looking at that I'm so excited by? And it is going back to this slide, guidance. You see this word right here, maintaining? That's exactly what they did. Remember, they reported back in April, and as a result, they had been hit by that massive tariff wave. Like a lot of companies, they said, okay, rather than pull back our guidance, we instead are going to guide cautiously. We're just going to maintain our guidance. And they said a number of times at some fireside chats and also in the earnings call itself that they said, hey, things are going really well in quarter two so far. Quarter one was better than expected. We'd love to rise guidance, but they weren't going to. Simply because of the tariff stuff. Yet, it's very interesting what they might guide for in the second half. So what PayPal specifically said in the first quarter there was that they have multiple growth levers in their position to help merchants and consumers navigate the environment. And they said with a strong first quarter and behind us and a good start to the second quarter, we believe we're on pace to outperform our original expectations for the first half. They talked about ramping in the second half. Again, part of that is shifting away from those massive Braintree headwinds. But it sounds like that there's a lot of acceleration there. We can also see that in terms of a lot of the products and the monetization ramp that they're looking at as well. And none of that is guided in for. So again, with their full year earnings itself, it wasn't just quarter two that they kept the same. Their full year earnings, they didn't raise at all. And they've launched a lot of interesting partnerships and initiatives. For instance, just very recently, the Wix partnership and PayPal World that were just last week. These are revenue drivers. PayPal World more so for the first quarter next year, but there will be some impact on the short term as well. But the Wix partnership kind of hits right away as well. The Big 10 and Big 12 partnerships, those hit in the third quarter. Advertising is ramping. The Braintree headwind is going away. And so this right here is not just sandbagging. It is super softball. They're going to very likely, given the confidence that they have regarding the current regulatory environment and also the macro environment in regards to tariffs, they actually said that they built in a 3% e-commerce deceleration this year because of the tariff stuff. That's baked into this full year guidance as well. So are we seeing a 3% slowdown in e-commerce? Well, what indicators do we have from that? Amazon Prime Day, or in this case, actual days. Adobe Analytics actually came out on the first day, or I believe maybe it was the second day of Prime Day. They noted that across the globe, there was a 9%, 9.9% actually, increase in e-commerce year over year. So e-commerce is not going down by 3%. Instead, it's actually increasing. And so given the favorability of the macro, the stability of the macro, PayPal just doing really well right now, launching a lot of different things. Now, I still think that they'll be cautious. I still think that there will be some sandbagging, but that's the thing to keep the most attention on is guidance. And right now we're seeing a bit of a mix so far with earnings, but mostly the market has been tended to be focused on two things. First is top line revenue. Now, the bad news is PayPal, yeah, they'll beat there, but it's not going to be like really exciting. You need to wait a few quarters really for advertising to really ramp, or at least the third quarter for that Braintree headwind to go away. So they'll be growing at like 8, 9, maybe 10% year over year top line revenue growth. But that's not this quarter. But the other thing that I've seen is company after company, it seems like that guidance is key, especially right now, because a lot of companies took the PayPal approach where they said, hey, we're not going to guide for this quarter. We're pulling back our guidance. We're keeping things the same. They were very cautious. And so you see things like Delta Airlines that reported, and they weren't very good earnings. But when they reported their earnings, they reinstated their guidance. And the market was so excited about it. Not only did Delta Airlines have a huge spike, but also a lot of the other airline industries as well. Now, I don't know what PayPal stock will do on earnings. My guess is it might just trade flat for a little while until they really understand, like, okay, this guidance, our expectations are way too low. And in fact, let's go back to that real quick. If you look at the revenue estimates right here for the current year, it is, look at the sales growth that they expect. This is way too low. EPS is also too low as well. This quarter, it's not so bad, but I imagine that there's going to be a lot of analysts that come out that'll either think, okay, PayPal is lying, which would be crazy because they, if anything, they softball and they sandbag, or they will say, okay, I believe them, let me raise. So that could lead to some price action after the earnings report. We'll have to see. Anyway, that's why I'm really excited about quarter two earnings. Also, I hope that we get some of the first reads on some of those early products, including advertising, including more talk about PayPal stablecoin, PayPal World, and a lot of these other initiatives that they're launching as well, the Big 10, Big 12. There's been a flurry of news, and yet the stock has not been going up that much. I think that changes in the next 3 quarters. I just don't know if it's this quarter. Anyway, I will be covering the earnings live with Couch Investor. We'll have a link out there for you guys. Of course, before the earnings itself, we'll listen to the call, and then I'll have to get off just for what I'm doing for work. Nevertheless, I'm going to be excited about this one. I think it's going to be very interesting. It'll be very telling as far as what they're expecting for the rest of the year with that significant second half ramp. May take some time again for the market to fully appreciate PayPal, but I think we're close. As always, thank you guys for watching, commenting, and subscribing. And until next time, happy investing.